Hello, it is the 27th of September, and the year is 2011. I have the 3-day chart on the screen, and it has the first Fibonacci level of the mark at $33.58. The level used is the 1774 low, which was placed on August the 24th, 2010. The $49.81 high was placed at near the end of April of this year. Well, we use the Fibonacci on an exponential level, not the regular linear Fibonacci. It's been amazing how well these levels have worked within technical analysis. 3358 was support on 2 occasions, and then when it broke down below it, it hit this 26 and low change level. Again, perfect mark. Now, how is this previous level of support going to work out towards resistance? Because one of the things that I like within technical analysis is many times you'll find confirmation of going to one specific level. When you get there, I have the theory of that now what? Because when the market closed on Friday, it showed no conviction to find support at this level. It was pretty much a guarantee or confirmation that we were going to head to 26. Now, how it was going to get there was most certainly unclear. One way was exactly how it happened. Just keep on going to this level and then bounce from it. That's what happened. Another area could have been to find resistance here and then go down. Obviously, that did not happen. However, it was $26.10 that hit on Monday morning, early Monday morning. And it then, earlier today, pretty much about 28 hours or so, give or take, it goes up to 33.54, which is, by the way, 4 cents shy of this number in here. Wow. Now this one here was manually written in because the computer didn't draw it in. 26.32, so maybe it should have been up here a bit. Either way, it was a hit. So the move from 26 and low change to 33 and a half is a little over 7 fiat paper rectangles of $1 on each one. Therefore, 260 is 10%. 520 is that of 20%. And if we take 130, that would be 650. That would be 25%. So 650 plus 26 would be 3260. It has gained more than 25% over that short period of time. That's extreme volatility. To give you an example within this volatility, the movements today, well, right now it says 43 after. At 9:32 a.m. Eastern Time, silver had a level reach of a peak for $32.90. 12 minutes later, at 9:44 Eastern or 15:44 Central European Time, it's down to 32.42. That's a difference of 58 cents, or about 1.5% on a very short-term intraday move. And then 3 minutes later, it managed to get up to 32.65 and a gain of about 2/3% in less than 3 minutes. I don't know what else to state other than these moves are extremely extreme. As far as the volatility on the short-term time frame, there's no headers on this chart, but I've showed it quite a bit. If you're new to the channel, what I have on the top are the hourly movements within volatility. And this takes the highest point, subtracts the lowest point, and then it divides it again by the lowest point within the 6-hour period, thus breaking out, to say the least, for high volatility. This means that we've broken the previous high back in May, and it's still continuously going high. I have been stating that the majority of these volatile moves, or 9 out of 10, 8 out of 9, something in that nature there, will be to the downside. but I am expecting one in the near future to be that towards the upside that would be extreme, because anything when you get past this level becomes extreme. And one of the things that I've mentioned that I'd want to see, or I'd be not really want to see, I don't know if I want to or not, but what I'm looking to see is how this previous 5% level, which has been resistance on several occasions, if it's used at least for a short period of time as that of support. Well, now this might be a situation where that is the case, because this level has had a little bottom in here, and what that could mean is that this afternoon would be the next 6-hour period, which is from 12 p.m. New York time to 6 p.m. the Eastern time, or 6 p.m. Central European time to midnight tonight. And if that could continue on some big volatility, it'll just be screeching. So the question is, if we have the big volatility, and that's not even a guarantee, this thing could just start to slow down, which it will at some point soon. But if we do have the big volatility, which direction is it going to go towards? When we take a look at this on the 6-hour chart and try to measure the volatility, we have a previous support line roughly right in here. This is an area that was tested on 2 different occasions as a level of support after the original crash. And this dead cat bounce is more superior than this one that we had back in here, which is the one that's over 25%. Now, it's okay to find resistance here on a bullish level. What is important, and I a lot of times say it has to hold 61.8% before going higher, and that's true, but I would be more apt to see it hold 38.2% from whatever the low happens to be, which is 2610, to whatever the high happens to be, which is currently 3354. Therefore, we can take our trusty little calculator, take the 3354 level, divide it by the 2610 bottom from yesterday, and let's take a look at what the 61.8% retracement, which works out to 38.2% on the way down. I do this to the difference of the high divided by the low to the power of 61.8. That works out to 1.168. We'll multiply it again by 2610, which gives us a price objective at roughly 30.5. So that's going to be a big level that I'm going to be focusing on, which is approximately right towards here. If the market can do something in the area of doing something like this, where it sells off, comes back up to it, when you come back to this level, the more often times that you test a significant level, the more likely it is that you take it out. Now let's go on to some other things that I've talked about. One thing that I've mentioned is the longer you're in a range, the bigger the breakout or breakdown tends to be. Now this was a decent sized range, but overall it really wasn't. And it was a pretty decent sized breakdown, but it occurred in here. And the reason why this wasn't that big of a range is because this is the 4th time in silver where I've seen the market have a nice huge run, an extreme capitulation move, which we've seen in here, and every other time that I've seen this, the last one was in 2006, is that it would go sideways for usually over a year and always break out to the upside. So this one is different. Instead, it was in a sideways consolidation for less amount of time, broke through this level, went down to the next significant major Fibonacci level of 26 and change, and is now back towards this mark in here. And it's kind of freaky in a way, because if you go and search the September 23rd, 2011 Imagination Land, I did this back in January, and I was predicting that the market would go up to close to the 50 mark, have a massive sell-off and then a considerable size range, break out to the upside, but that be a failure, and then crash and break down new lows to the downside, which would also become a failure, which would result into major days towards the upside. Now I want to switch this into WebBot now, because WebBot is getting a lot of things correct right now. And we're looking at the situation within those $5 days turning into the $20 days. Basically, we're getting very close to the time where the you-know-what is hitting the fan, basically. Now, they nailed the Occupy Wall Street better than I could even imagine. That was reported by JSNIP4 yesterday, talking about the, the, the enforcers, the police officers, what's the thing they use to the gates or whatever, the fencing. They nailed the fencing part of it extremely well. So the question is, are you ready at any point for the hot potato game to come to a close? All right, I want to finish this off within this format of the 6-hour chart. When I made this band, the reason why I made it was because I perceive, this is personal persuasion, not persuasion, personal belief and observation that the conventional Bollinger Bands, in my opinion, were considered wimpy. And when I said wimpy was, oftentimes you'll see that the Bollinger Bands in a range is the next major break or small breakout from the range. To me, that's not cool. Thus, it is not a challenge for markets to hit Bollinger Bands. This one, I tried to make it a challenge, but the reason for this is not for how people look at Bollinger Bands, although it can be used this way for finding when markets are overbought and oversold. Thus, the general theology is you don't sell when you're at the bottom part of the Bollinger Band, or upper band, lower band, whatever, and you don't buy when you're on the upper part. That's the basic scenario. But what I like about this, or the reason why I'm putting it in and keeping it in right now, is because it gives me a nice gauge of parabolic moves either towards the upside or the downside. Because when you reach these bands, which are not easy to hit, and it takes a lot of volatility and big moves to hit, then you're going to have one of three things happen for the most part. One, you're going to correct sideways, and then the bands will start to readjust itself back to a normal situation. One, you get a price correction, and then the same thing, the bands would readjust itself. The next one is you get continued movement within the trend. However, what you would never expect is if the trend continues, say in this case a down move, is that the moves would be at the same level or smaller. Instead, they would be at greater levels, and that was exactly the case, because it comes down to this band in here, and then boom, this point here, it's telling us, no, we're not holding on too well, and boom, 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 big moves towards the downside as it was staying below this lower band. The same theology can also be said for the upside in situations where it hits that level. Currently now the price is within the front-weighted 5-day moving average. This is the first test of this 5-day moving average since we've had this run. It also coincides with the $33.58 mark Fibonacci, and like I said earlier, finding resistance here and a higher low is what's important, but this market is going to either need a lot of time to heal, or the you-know-what's hitting the fan. If it takes a lot of time to heal, then it's just as I said, it's going to take months and months and months to not only get above 50, but to have solid gains after that. Or if the you-know-what's hitting the fan, the roller coaster is just moving to another higher gear at this point here, and it's going to continue to move in a higher gear with volatility coming in and out within the market, but for the most part, higher volatility to be the path of least resistance. Alrighty. Thank you for tuning in, and like Silver Futurist says, I hope you learned something during this 14-minute and change video. Take care.